A lot of traders are using VWAP in day trading and scalping, and it's a very useful tool because VWAP shows the true average price of a market by factoring the volume of transactions. Most traders are using daily VWAP, but did you know that you can also trade based on the weekly VWAP? Weekly VWAP adds more value than the standard 50 or 200 moving average indicators because this line reacts to price movements based on the volume during that period. And in combination with the RSI, you can determine the trend and momentum in just a few seconds. You know the drill. Like, subscribe, and stick around for the full video. You find the weekly VWAP here. At the anchor period, you choose weekly. And we'll hide the bands for now. We'll just focus on the main line. For day traders and scalpers, the VWAP is often used as a trend indicator. For big players and institutions, it's used as a benchmark price to evaluate the quality of executions from their trades. Weekly VWAP shows you the trend depending on where the price is trading, above or below in relation to the VWAP line. A market trading above the weekly VWAP as the line rises indicates an uptrend. A market trading below the weekly VWAP as the line declines indicates a downtrend. One of the simplest uses of the weekly VWAP is for finding dynamic support or resistance. VWAP line acts as a support if the price is trading above it, and as a resistance if the price is trading below it. Weekly VWAP also offers entry and exit levels. One trader's support is another trader's resistance. For example, a trader who is long on a market can use the VWAP as a target exit if he entered below. Traders looking to take a long position can wait for the price to break the VWAP, or wait for a pullback and a bounce off the VWAP. You can see why the weekly VWAP makes for a great entry and exit area. There are two main types of trades: breakouts and pullbacks. Now, from my backtest, I found that the weekly VWAP works better when combined with a momentum indicator like the RSI. Yes, the RSI is lagging and it offers many false signals on the lower timeframes, but if you can use it correctly with the right settings, it can show you the current momentum with decent accuracy. And no, we won't use the RSI as an overbought or oversold indicator. We'll use its 50 line instead. We'll use this indicator, RSI candles. We'll change both values to 50. We'll also change the length of the indicator to 50. The indicator changes the color of the candles if the RSI is above or below its middle line. When the RSI indicator is above 50, we have bullish momentum, and when the RSI is below 50, we have bearish momentum. It's very easy to assess the current state of the market. Price above the VWAP, bullish trend. Green RSI candles, bullish momentum. In this situation, you'll look for long signals. Price below the VWAP, bearish trend. Red RSI candles, bearish momentum. Now you look for sell signals. From a visual point of view, you'll see the trend and momentum almost instantly. If the trend is strong and there's also momentum, you should see something like this. Price breaks the weekly VWAP line. RSI maintains above its 50 line, so the candles remain green, and the price moves in a healthy uptrend. The same for short signals. Price breaks the weekly VWAP line. RSI stays below its 50 line. The candles remain red, and the price moves lower and lower. These are the best market conditions that you should trade, when the RSI candles don't change color and the price remains above or below the weekly VWAP. Timing is everything in day trading and scalping. While prices may be trading above, below, or at the VWAP, You really want to enter trades when price is about to move away from that area. When it comes to a weekly VWAP breakout buy signal, price moves above the VWAP. This can often signal that sellers are exiting their positions or buyers are gaining strength, which moves price above VWAP. Now, very important, ideally, the RSI is already green at the time of the breakout. So there's bullish momentum before the weekly VWAP breakout. This is not a must-have condition, but there's something I've observed in my backtests. And to filter signals is also good to have a price action confirmation. The weekly VWAP RSI signal is stronger and more reliable when price moves above a previously resistance level or breaks a trend line, a confluence which may result in an extended price run. For a weekly VWAP breakout sell signal, price moves below the VWAP. This time, buyers are exiting their positions or sellers are gaining strength, moving price below VWAP. The RSI in the best scenario is already red at the time of the breakout. There's bearish momentum before the weekly VWAP breakout. If the candles are not red, you wait until you see the color change below the VWAP. And this short signal is stronger when price moves below a previous support level or breaks a trend line. The second VWAP entry is the pullback one, when price is on an extended move upward or downward and then makes a movement towards the weekly VWAP line. If the RSI doesn't change its color, meaning the overall momentum is still on, this is a chance to buy or sell at the weekly average price. If the RSI changes its color during the pullback, let's say price was below VWAP, RSI was red, and comes back to the weekly VWAP, but the candles are now green, you have to rely on a price action trigger to enter after the RSI crosses once again below 50. Again, trend line breakouts, pin bars with big wicks, or support and resistance breakouts are valid signals. This is Bountian. Price is below the weekly VWAP, and the RSI candles are red. So this is a market which favors short positions. We have this important support level which was broken. So this is our price action trigger to initiate a short. Stop loss goes above the weekly VWAP line and above this previous resistance level, and we set a risk-reward ratio of 2. Price returned once again near the VWAP line. Market is making lower lows and lower highs. RSI candles are still red, so if we have a VWAP touch and a rejection, we'll consider another short. That's unlucky. Price reversed before touching the weekly VWAP. I prefer to enter close and very close to the VWAP line. I'm conservative, which means I will miss quite a few trades if the trend is strong. For a few pips, I missed here a decent trade. But if you are not conservative, you can enter even if price isn't near the weekly VWAP. Let's continue. Again, price almost returns to the weekly VWAP, but no touch yet. Okay, now we have a breakout trade. Price broke the weekly VWAP. RSI candles changed color before the actual breakout, which is the ideal scenario. We also have several price action triggers. I see this break-off structure here. And I also see this trend line breakout. So we enter a long position with a stop below VWAP and below this swing low. We'll target this swing high. Things are easy when market is trending and has momentum. Look at this weekly breakout trade right here. RSI candles changed color right at the breakout moment. The price action trigger was this trend line breakout. And another breakout trade, a short one this time. we have a breakout below VWAP, with RSI moving below 50 level. The trigger was this support breakout, which is the neckline breakout of a head and shoulders pattern. Like I said, when market trends, it's easy. But how about when there's a range? More specifically, when the RSI candles change color often. Look right here. Even though price is above the weekly VWAP, the momentum is unclear. I have a rule to avoid getting chopped or entering consecutive trades when the market isn't moving. When the RSI changes its color 4 times in a short amount of time, you mark the range and trade when price breaks it. So this is the chop zone with multiple color changes, and you avoid trading inside of it. Here's the signal. We have a breakout to the downside below the weekly VWAP, and the RSI candles are red. Now it's the time to enter a short trade. Stop goes above the VWAP line and will target the previous swing low, which offers a risk to reward ratio of 2. I found that the weekly VWAP suits the stock market better than any other market. Stocks tend to have cleaner trends and seem to respect the VWAP line more accurately. Here's a short pullback on Tesla near the weekly VWAP line. RSI candles maintained their red color during the pullback, so this is a valid setup. We have a quite big up gap with consecutive candles breaking the VWAP line. Price is above the VWAP, but the candles are red, so this is not a good time to initiate any trade. Now we have multiple changes in RSI, so let's mark the range and trade when we see a breakout. Okay, I'll take this short here. We have a VWAP breakout, a breakout below the previous range, in the context of a downtrend, as price is making lower lows. We'll put the stop loss above VWAP, and we'll target this previous swing low. We had some downward momentum, but now price moved above the VWAP line, so we'll close the trade manually with a small loss. Another range is forming, with RSI crossing its 50 level multiple times. Again, we'll mark the range and avoid trading inside this channel. Another short setup in the context of a larger downtrend. We'll once again target this swing low. Successful trade, and I also see this pullback trade right here, a second chance to enter if you missed the first entry. One more aspect. When you find yourself analyzing a market which looks like this one, with price moving above and below the weekly VWAP multiple times, again, don't trade. Draw the channel and look for opportunities when the trend is more obvious. If you want to see more videos like this one, leave us a like and subscribe. And check out our Academy program if you want to further level up your trading. Until next time.